So folks, I just want to do a quick update on stocks. I've just done a video on natural gas. If you want to have a look at that, go and have a look at the previous video on my channel. And there I do my analysis and assessment of natural gas. I want to have a look at the stocks and the stock market, some stock names and some of the indices. The first thing I want to look at is the NASDAQ composite, not the NASDAQ 100. And there's another observation I want to point out from a different analyst actually, and I'll show that to you after this. But you can see we've moved down all the way from the top to the bottom. That was last year. And then since January this year, we've had this recent move right up. And then this recent sort of squeeze or bubble-like move up as tech stocks and particularly the AI stocks have gone completely mad. What's really interesting about this chart is that Friday's move precisely touched the 61.8% Fibonacci retracement of this entire move down. If I zoom in there, you can see it couldn't be more perfect. In fact, we touched it exactly. What happened immediately after that touch of the top, after making a new high on Friday compared to Thursday, after Thursday's bullish candle, was that we had this rejection downwards and a close near Friday's lows. This is called a dark cloud cover candle. A dark cloud cover candle is characterized by a gap higher and then a close lower with a small lower wick, or non-existent in this case, more than at least halfway or more than halfway down the previous bullish candle. And you can see if we take the top to the bottom of Thursday's candle, we closed about halfway down through that. This is a classic dark cloud cover candle. It's a bearish candle and it signifies that we may have a reversal. It doesn't mean that we definitely do. If we look at June the 7th's move, we had something similar, although this turned out to be a bearish engulfing candle, and we continued to rally even after that formation. And you can see actually along the way, we've had several reversal candlestick patterns of different types. So that doesn't mean that we've reached a top. We have, however, reached the 61.8% Fibonacci level. The other thing that I want to point out, which I have unashamedly stolen from another analyst and fund manager, is this. The move from the high down to the low, which we'll draw with a measurement tool, from this high down to the low, was a 37.7% drop. So I'm going to lock that in there and then start from the low to where we are at the moment, or where we reached on Friday. And that's at about 37.1% from the bottom to the top. So we've moved up in this last rally, which is now no longer a bear market rally. Technically, it's actually a new bull market. But that move higher is exactly the same in terms of percentage as the original move lower. The reason I point that out is because this pattern has repeated time and time again during past bear markets. And I'll take you to the year 2000 example. And once again, I'll use the measurement tool to draw the distance from the top to the bottom here. And that's about 40%. And then I'll draw it back up from the bottom to the top before we moved lower. And that was just a fraction over 40%. So the amount of correction in what turned out to be a bear market rally was the same as the distance from the bottom to the top. That was 40% down. We rallied 40% up, and then we continued downwards. And you can see that the move downward was very extended thereafter. So that's just an interesting point to note, which I hadn't noticed before. So we've got this reversal dark cloud cover candle at the 61.8% Fibonacci, and the move up in this potentially bear market rally, or could it be a bull market, is the same as the move down that we had from the top last year. Whilst we're looking at stock market indices, I want to show you the S&P 500, and this is also an interesting chart. You can see we've got this channel, these green lines. I've just sort of zoomed out a bit, and we've reached right up to the top of this channel in a very overbought market. We've just touched the top of that channel, and it also happens to be the supply zone going back into 2022. If we zoom in and have a closer look, you can see we've just about touched the top of the channel. We wanted to get short on this, but we didn't quite get high enough. I wanted to short this at 44.50, and we only got up to 44, 44 or 45 on Friday, and we just missed our short entry. This candle here is not really a reversal candle. It's more of a hesitation. We've got a much higher low and a slightly higher high. We have reached up to this channel line. But what's interesting is despite the small size of this candle on Friday, we had quite a lot of volume, indicating that this slight or small move down was accompanied by some enthusiasm in the market. I want to have a look at four names very quickly, and the first one is AMD. This one I've pointed out before in a previous video, and I've also put a tweet up on this one. This is a very interesting one. We have these three white soldier candles with an exhaustion candle right at the end, a hesitation candle, followed by a dark cloud cover, which turned out to be a bearish engulfing candle, and a move lower subsequent to that. So we're short AMD, and this is a typical topping pattern after having broken up through this red line, which is a previous resistance level going back into 2022. If I draw a Fibonacci retracement on here, you can see we've actually broken up through the 61.8% Fibonacci, which is kind of bullish, until we get to the 78.6% Fibonacci, which we have not yet reached. So in terms of Fibonacci analysis, still kind of bullish really. We should actually test $141.40 or so. We haven't reached there, but we have formed a double top with the second high in the double top being slightly higher than the previous one, and this three white soldier progression higher with an exhaustion candle forming the last so-called white soldier with a sort of a doji star type candle, followed by this engulfing dark cloud cover bearish engulfing candle, and we've begun to move lower. We've just touched the 20 period moving average, and there isn't a lot of volume on this move down. So at this stage, it's fairly inconclusive. And we've also got a really good support level just beneath us at $116.50, a sort of a ledge here with a gap beneath it. So if we do manage to break beneath this ledge and fill this gap and potentially move down after filling that gap down towards these lower levels, that might be a good indication that this move is set to continue on downwards. We'd like to see this obviously happen in conjunction with other tech stocks, and particularly other chip stocks like Nvidia and the overall NASDAQ and S&P indices too. So far so good, but we've got this big ledge beneath us at 116.50, and we've got a gap to fill beneath that, which we really want to see not only filled but surpassed for the price to move below there and down towards these other moving averages. There's the 50, the 100, and the 200-day moving averages. Let's scoot across to Nvidia and have a look at this. Well, we've got clear sky above us. Nvidia has made new all-time highs. There's the big gap after their earnings announcement and their repeated use of AI in their following statements, that massive gap higher. And since then, we've just sort of edged higher and higher, and there's no sign of this turning around yet. But what is interesting is that Friday's candle was a bearish candle following the star doji candle on Thursday, and you can see the volume actually just ticked up a little bit on Friday's very small and very inconclusive bearish candle, but with a little bit of an uptick in volume and following this little star doji candle. We've got loads of space beneath us. At some stage this gap is going to have to fill, and that red line there represents the previous all-time high before the move down in 2022. So typical of any breakout, and in this case combined with a gap, we'd like to see the breakout level retested. That's at 344. We'd also like to see the gap filled. That would take us down to $316, and then potentially a move back down towards either the 100 or the 200-day moving average, so that we can resume this pattern that we've seen for a long time of the price just trading along the 100 and the 200-day moving averages. You can see quite frequently we pull back to the 50-period moving average, the red one. Less frequently, but quite often, the 100-day moving average. And then on occasion, after an extended move, we need to pull back to the 200-period moving average. That's this purple one here. Look how far we are away at this stage from the 200-period moving average, and that's currently at $210. So I'd expect a pullback at some stage into somewhere between $180 and $200, maybe $220, and ideally we'd get back down to the swing low from 2022 at about $110. So we'll have to see how that goes. Right now, there's no clear indication that this is about to turn around, but we have had this tiny dark bearish candle with a slight uptick in volume, and the day before we had the star doji candle pattern. I wouldn't be surprised if next week we see Nvidia, along with other semiconductor names like AMD and a couple of the others, starting to pull back inwards. And just like AMD, we've got this ledge at $370 or so, which marks the start of this gap and the move down towards this previous all-time high at $344. So we've got plenty of key levels below us to watch out for. We've got the makings or the murmurings of a top formation in place right now, so we'll keep a very close eye on that one next week. So let's look at Apple, and then we'll finish off with Microsoft. So Apple has just been a procession really of moving higher and higher and higher, and Apple also made a new all-time high. After poking up through it briefly a few days ago and collapsing back down, we've just pushed back up again through it and made yet another new high, taking us all the way up to about $187. So we've had this incredibly steep run up. If we have a look at previous moves on Apple just for comparison, you can see that it is prone to extended moves higher, but some of these took place in bullish overall markets. We're seeing this extended move higher currently in the face of all sorts of reasons why the stock market should be falling off. And that's related to rates and money supply and bank problems, impending recession, contracting and shrinking economies, all sorts of doom and gloom. But there are reasons for the markets to carry on marching higher, and there are equally as good reasons for the markets to collapse, potentially to even lower lows than we saw in 2022. I think everyone agrees that this is a bit of a bubble that we're seeing right now, with dramatic rallies in stock markets seeming to be untenable. So what can we say about Apple apart from the fact that we've made a new all-time high? I don't worry about that too much actually, because I kind of like these stocks to overshoot, make new all-time highs, make new 52-week highs, before reversing, because I think that increases the opportunity to develop greater liquidity to the short side after having removed some of the stale short positions and those who were clinging on as long as we were below that all-time high. So let's have a look at what happened on Friday. And here once again we've got a dark cloud cover candle after gapping higher and closing with a small lower wick more than halfway down the previous bullish candle. So that's a classic dark cloud cover candle. We've got nothing above us to act as resistance, so we're going to have to go on price action. But what is interesting on Friday is look at the volume on Friday's candle. This is the largest volume we've had in quite a number of days, and it happened to be on this fairly small dark cloud cover candle. And if you look at the biggest volume bars since really the end of May, all three of them, the three largest ones, the sort of tall poppies in this pack, are all the bearish candles, including Friday last week. So you can see those three volume bars, or volume candles if you want to call them that. The three largest ones in a month and a half almost of trading have been the three bearish days, those three bearish volume bars there. And we saw the same on Friday. So whilst that might not be a top in Apple, it's certainly something to be borne in mind. And it's really, really interesting considering what we're seeing on AMD, Nvidia, and also on the indices, the NASDAQ Composite and the S&P 500. The last one I want to look at is Microsoft. And I did put a tweet up on Microsoft saying we've just reached the all-time high. This was a couple of days ago. And I said we'll probably push through that all-time high and make a significantly higher high before then moving back down again. Once again, clearing out some of those short positions, increasing liquidity to the short side, and rebalancing the whole structure of positions in both spot markets and options markets. What happened on Friday was we did in fact make a new higher high, but only fractionally. And once again, we've got a dark cloud cover candle. So there we go. I've zoomed in a little bit. There was Thursday's candle, just touching the all-time high, but not rejecting from it very much. And then on Friday in pre-market, we moved up, created a new all-time high, and then collapsed back down, forming this dark cloud cover candle, closing more than halfway down through Thursday's bullish candle, and with a shaven bottom or virtually no wick on it at all. Once again, look at the volume candles over the last period, and you can see going all the way back to the beginning of May, so again a month and a half, the biggest volume bars have been those on bearish days, including the one for Friday. So it's that one there, that one there, that one there. So we're seeing the same patterns on Microsoft that we're seeing across many of these names, including Apple, Nvidia, AMD. We're also seeing stock indices at crucial levels, with the NASDAQ Composite reaching the 61.8% Fibonacci level, retracing as much as the fall down during 2022, and we're seeing S&P potentially reversing at that channel top that I pointed out earlier on. So have we reached the top in these markets? I don't know, but I think all the signs are starting to look better and better, and all the evidence is looking more and more compelling for the fact that we may eventually be seeing an end to what might be considered a bubble or an irrational move higher based on AI and chip stocks and so on, and that we might be seeing the beginning of a correction, or potentially even, as many would like to think, the beginning of a new phase of the bear market that started in 2022. Well, I hope you found that useful. It's been a confusing and very difficult market to trade, but if you did find it helpful, please give the video a thumbs up, and if you're new to the channel, why not consider subscribing. Take care, good luck, and I'll speak to you soon.